let's look at Nintendo. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we have interactive entertainment here as part of the Megatrends. So the performance is substantially better than the S&P 500. And if we go here to the sectors and we go here to these, video game ETFs like this one and this one, you can see that, the performance is substantially less than the Megatrend theme. So here are the stocks in the theme. So you do see that, GameStop definitively lifts a lot of weight here. So if we just remove temporarily GameStop like this, all of a sudden, the performance is dramatically reduced. Okay, so here is Nintendo. I have classified it as, diversified, pretty close here to the 52-week low, and the minus 33% pullback. So, Nintendo is interesting because they have, the Nintendo Switch, which is a pretty, popular gaming console. And now they have the new model, the Switch OLED. And this one. So yeah, it's great video game company. And when we jump here into the charts, it becomes pretty interesting because we have this key technical pattern here. So we are now testing the incredibly important red 200-week moving average. It's been clear resistance in the past and also very clear support throughout this rally. So from a risk-reward perspective, it's been good for the bulls to buy that support level. We also see that this stock moves in these major rise and declining cycles. So we have some small time cycles and also some major ones as well. But yeah, from a purely technical perspective, these are weekly data points. This is very interesting from a bullish perspective. So the stop level would be then a clear break of that 200-week moving average. It's been important for such a long time that we do definitively expect it to hold. When we go here to the daily data points, the technical picture is a bit, it's a bit nasty. The bears have been doing a lot of damage, so we are below a lot of key moving averages. The purple 20-day moving average here is a resistance level. So when we look at these other, indicators, like here, so what is especially interesting is that we do see that the stock is actually being rather reasonably accumulated. So there are bulls buying here. So the accumulation distribution is looking decent. RSI has pulled back to a level that back here it was bought, which formed this major low here. This bounce here was also bought, but that was only a bounce. When we go back here, a similar RSI level, and that, formed a very key low. A distance from the 20-week moving average and the 50-week, it's at a level that has been bought many times in the past. Going to the daily data points. So notwithstanding this pretty sharp sell-off, I think that accumulation has held up reasonably well. Looking here at the distance, from the blue 100-day moving average and the red 200-day moving average, it's at a level that has been also bought in the past. Like back here as an example, which formed a key low. So yeah, from a bullish perspective, it just looks interesting. So now we look at correlations with the Nintendo, the 7974, which is listed in Tokyo. So what I analyzed just recently, that was the NTDOY, the over-the-counter alternative. I think for most of you it will be much easier to interact with the over-the-counter. Okay, but anyway, here are the correlations. So there's an 81-ish% positive correlation long-term with the S&P 500, 99% here with the over-the-counter one. You see that there actually has been some periods where the correlation was actually rather weak, like back here, but generally speaking, you see that there's a very strong correlation. So they basically are the same thing, at least they behave as such. There's an 89% positive correlation here with the gamer ETF, and 24% positive here with the Japanese yen ETF. Then we have minus 71% actually negative with the S&P 500 short term, 99% with the over-the-counter, 85-ish% positive with the gamer ETF, and 58% positive here with the Japanese yen. When we jump into the seasonality here, over the last 5 years, November has been one of the strongest months, which is, bullish. Over the last 10 years, November is, the third strongest month, which is also pretty good. And over the last 20 years, it is the second strongest month. The only one that is stronger is March. So the seasonality is definitively bullish. We don't get any data from Finwiz, but when we go here and look at the Japanese one, look here a bit at the ratings. So here you can see some ratings. The profitability, finances are looking good. Valuation, PE ratio. Yeah, look at sales, price to book. It's okay. Momentum is looking decent. Here is the analyst opinion, potential price target. So here you can see the analyst price targets vis-a-vis the stock price. Okay, but you can see here that the price target here is it's pretty significant above the current stock price. So it is currently 35% above the stock price, which is obviously bullish. Okay, so to sum up my take here on Nintendo. The theme is definitively interesting. We are at a very key support level, so the technicals here are just very bullish. The seasonality is also bullish. The fundamentals also has a bullish lean. And I do actually think we have something here from Sachs as well. So Sachs, their take is that it's a number for sell, but we have a B value and B growth score. So Sachs is also bullish, and the dividend here is actually pretty juicy. 4.7%, so that's huge yield. That's big yield. So I think there's too many reasons to be bullish here. But we always want to have a stop level, and I think that the key thing here is to just look at that 200-week moving average. Given that it has functioned as support in the past, we definitively expect the bulls to use it as that now. Because there's too many reasons for them to do it, seasonality and all of the other factors we have highlighted.